This is Justin Pulitzer. This is my weekend review video for Sunday, April 26th, 2015. A lot to cover, so I'm going to dive right in. Before we start the actual video here, though, I want to discuss that I had been in a Wall Street Journal article. I will post the link in the description below, and it will probably also be on screen right now for you to click on if you would like to view that article and see the attached video that comes with it. So with that said, let's dive right into the charts. The SPY chart here, as you can see, there are a lot of levels marked, and I could see obviously it's a little bit cluttered, but if you just follow where I'm talking, I think it should be pretty clear what's going on. As you can see here, the SPY had been in a consolidation phase with 100% retracements in this range, and the key to that, the top part here to me, was this 206.42, and you can see after we broke out of that, we made incrementally higher, about six handles up to the 612s. I'm sorry, to the 212s, and then the market got back into one of these pullbacks and consolidation phases here. Now, this one didn't have a third touchdown here. You could see we only had really two, and we were starting to look like we might have a third like we did here, but didn't. And we wound up breaking this sort of down channel, and now we clipsing these highs slightly to have a slightly higher high here, closing in the upper distribution. If you've seen my videos before, I like to talk about distributions, and I've grayed out some of the bottom ones just because they're not so important right now for this particular time frame, and I really want to focus on this upper distribution here. You can see we're starting to make some higher lows and higher highs, although be it grinding and incremental. And anyone who follows me on Twitter, my handle, by the way, is @JustinPulitzer, knows that I've been discussing that the MOC, which is just the market on close order imbalance, has been really skewed to the sell side for like the last 3 weeks. And actually Friday here was the first week it was any type of significant size to the upside. I've been saying it's if the sort of the buy side has been dollar menu, which is my kind of term I've coined for anything sub $100 million in either direction. And the sell side has been rather large, and that's sort of, I guess, what's been causing this sort of begrudging move higher. And there's been a lot of lack of conviction. Maybe we start finding some religion here in the market, and it figures out which way it really wants to move with some type of a trending conviction phase. But for the most part, in 2015, we've been dealing with this like sideways, push me, pull you, chop market. Anyhow, let's focus on what is happening here. So we are above this 208.97, which was this old high. We are firmly in the upper distribution here, and the question is can we make a new high? Now, we do have some room in the channel. You can see I've drawn a channel. I don't want to rehash it here because we have so much to cover, but I've shown it in prior videos, and that's really just a channel that connects the lows from the 2011 sort of debt ceiling fiasco correction low to where we are currently. And you can see there's a lot of room to the upside here into the 216s. But I've also drawn in some Fibonacci extensions here from the 2007 peak to the March 09 low, and the 1.168 Fibonacci extension past those 2007 highs, depending on which time frame you're calculating it from, brings that into 213.4 and 214.17. And you could see that might be consistent with the type of price action we've had here, where we've kind of broken out and made incrementally higher highs and then had correction. And if you take a look here, we may be setting up for something similar, like we come up above these highs here to break out of the range, similarly like we did there, and then just kind of come up and tag these out and then figure it out. I drew in a bit of a secondary trend line here, which we've been holding fairly well, and I still think that that could be used for right or right out types of buys on support on corrections. So if we do wind up coming up here, this to me would be an area maybe to lighten up into, and if we do wind up coming back down, I have these levels marked here as the important sort of levels that we need to be over, or areas for right or right out type of trade. And you can see I have a volume distribution, and I feel like this 207.84 and this 208 97 is kind of the key area. You could also see the 50-day moving averages there, and it's also going to roughly catch up to the backside of this prior down channel. So the expected move this week in SPY is about $2.50 based on what's being priced in the options. So that's no biggie, you know. I mean, that could take you up to here, and that would also roughly take you down to here. So that's just sort of what I'm looking at. If we do wind up having a steeper down move, that number could easily get jacked because the VIX is in sort of a lower part of its range. I'll discuss that in a little bit. But for now, this is the kind of range and levels I'm looking at. Either for the downside, you can see this comes in where the upper distribution sort of gets into cautionary zone. And up here is where I would think there would be some type of a resistance. If we do wind up getting some type of a blow-off move in the market with some type of a capitulation move up, then I think the upper part of this channel would be in play, and I will discuss that actively if it happens on the stream in real time. IWM, and it would help if I could type. IWM was a bit of a laggard here. You can see we are not at really new all-time highs, but we are still in that. We are well in that upper distribution. You can see it's sort of this like rising wedge, which is, believe it or not, subject to types of liquidation breaks, sort of like we saw here. So it would not shock me to see if there's some type of weakness early in the week in the market if we come back down and tag out to the 50-day, which is roughly where these lows come in, and potentially with some type of an overshoot to the channel low here, which is into the 222s, which is sort of the meat of this chop. If we do wind up getting higher, you can see here we have gotten into the 1.272 fib extension from the 07 high to the 09 low, and it's possible we do have some type of a move up to get that the 1.618 fib extension at 131.75, and you can roughly see I have drawn in a regression, an unofficial regression line. You can see it's supported here, it's sort of supported here, it really chopped below here. Same thing, we rode the side of it before a correction. So we haven't been near that in a while, and we have a lot of room now. You can see that we've put some distance, we've consolidated more with time and price sideways, so there is room to get up to there if there is some type of a spike action capitulation. If we come out of balance here, up. If we come down, obviously we're looking at this channel low as the immediate term support if we lose that 50, but I do think that area should be support in the meantime. The Qs, new highs here, well above this consolidation chop, and it did it in a little bit of a gappy fashion, which, you know, I always think is a little less sustainable, but you can see here when we came out of consolidation, it did it in gaps, and then it just kind of ground higher. So it's possible we have a similar scenario with that in the Qs. I, for some reason, don't have those fib extensions in, but that's probably because we're still below the .com era high, which is 120.5. So there's really no fib. I mean, you could draw some fib extensions, but there isn't really as much of a reference there as there is here. So I do think that there could be some more room up in the Qs, particularly if Apple is good on Monday. They report Monday. I'm going to discuss that in a minute, actually. I just have a couple of more. I want to just talk about some other stuff a little bit before there. So if we do wind up coming off with some type of a pullback, you know, we have this reference high here, which is key, this 109.42. We could even come midway to this sort of this chop range here to the 50, which would be 107s. And for me, really the key with Nasdaq is that it stays over these 106 quarter. Although now we are really pretty far away from there, and I think a move back down there would be really a lot more, I wouldn't say like super duper bearish, but it would really put us back into this chop zone, and I think it would make the market really much more uncertain, considering we are now coming with higher lows now and higher highs. If we were to really retrace that much, I would think that the market is starting to get a little less healthy. So I really would be looking for this area, these sort of highs in here, to now support on some type of a move back down. So that's my views on Qs. I'm going to discuss, like I said, with Apple, that's going to really be the kind of the deciding factor for the Qs. The VIX, as I said, has now been, it is well below trend here. You can see we sort of looked below. We are now making lower lows off lower highs in the VIX. That's very bullish for equity markets. But, and there's always a caveat, the VIX will always have some type of intrinsic value because people will always be looking to buy protection. And we are pretty close here to filling up the triangle to these reference lows here, which is around 1153. And you can see down here there were still some lower ones in the 11s. So we are getting a little bit extended to the downside. So if there's some type of a spike move down here, you might be looking to lighten up on equities or buy some put protection, particularly in the S&P 500, to hedge longs with. If this does wind up coming back up, you can see there's all types of resistance. A backside of trend line, 50-day moving average, 200-day moving average, all at relatively low numbers in the 15s. The 100-day MA is still below 16, and then you have down, these upper these are really sort of the correction territory levels I have in VIX. Anything above 1757 to 1785 to me starts getting a little bit more dangerous. That would also break this downtrend here and probably put a spike move up into the 20 to 22 area in play. I'm not really seeing anything here that would cause that, although, if the market gets squirrely, that's what's going to happen. The first line in the sand, though, to me, that's really the key was this double top here in VIX that we had, the 1720. So anything below that area, I still think the markets are still in healthy, push me, pull you, buy the dip type of mode. If we start getting a bit above there, now we're starting to get, a pattern shift where we're coming off of lower lows but then making higher highs. Let's see what happens. I do think that it's potentially possible that there is some type of a bounce in VIX, but that doesn't necessarily mean that we are going to get that big upward move. One of the things that has me thinking that is TLT. You can see it is in a downtrend. It has been kind of flirting above the down channel here, but it's really roughly been holding in this really strong upper distribution here. And the upper distribution I really would consider anything really, honestly, in TLT above 123.15 is expensive. That was the 2009 crash peak high, and you can see we are well above there. So we had this sort of capitulation blow-off that wound up forming kind of like a cup and handle pattern that resolved higher. So anything above that 127.68, I think that the TLT is sort of in the upper area, the upper distribution, but you can see it is in danger of having a move lower and possibly considerably lower if this breaks. I'm not necessarily in the mind that rates really need to super-duper get strong and rise here. I think one of the things that people have gotten themselves really worked up about is the Fed and what the Fed might do, and we do, by the way, have a Fed decision this week. I believe it's Wednesday. So keep this in mind. There should be some fireworks in this TLT sometime between here, probably on Wednesday. So I'm thinking though that I'm not a fan of this because I do believe in the zero bound, and I don't believe that we're getting to 0% interest rates. A lot of people have been citing that interest rates in the U.S. are high relative to their European bond competition, that those bonds are trading at like 1% or in some instances sub. I think that it really has to do with the demand for money and borrowing, and the economy here is healthier than it is over there, and that's the reason for the divergence. So that said, I think that there would be, if there is some type of a spike move down here, these reference lows probably would support because you have a bit of a tertiary trend line here. I don't want to go back and start drawing, but I do think down here near this 200-day moving average and this low down in the 123s probably would garner some support. You have these reference lows, and it could be a good right or right out by the dip type of a scenario. If that fails, there's plenty of room to the channel low here, roughly in the 118s, 119s, where there had been prior levels there. So these are the distributions I see with the demarcated prices that I have here as really the keys for TLT. A gap fill here, that to me is roughly coinciding with this, maybe with an overshoot. I do think this area would support. If we do wind up coming back up, there is a gap to fill up here. I don't necessarily know if we get there, these 137s. Maybe if the Fed is like super duper dovish, but the way the data has been coming in, they should really be thinking more about cutting interest rates rather than raising interest rates. You've had slowing growth. You've also had not such hot employment numbers with revisions down. We'll see how that goes. I think the Fed probably needs to see at least 2 or 3 numbers before they start really thinking about going in terms of really raising rates. IBB is riding. I had drawn this channel within an up channel, and it started poking out, and we're sort of back up into there, so it's sort of decision time. I do think if there's a pullback in IBB, the 50-day MA will probably, because it's supported here, be a good, and it's also with the bottom part now of the channel, would be a good write or write out by the dip type of a scenario. If that fails, just reverse the position and go short, looking for these lows here as a reference to cover, and then potentially even lower. I've drawn the lower part of the channel here. Maybe if there's some type of a larger market correction, we could pull back there. Like if Gilead or some of these other bigger names, kind of muff it. We already had Biogen muff it. I'll show you that. You can see we sort of had this blow off here. It came back, tried to bounce, and now we're making lower lows. This had been in an upper channel. I do think, though, that this would be a really good long if it did happen to retrace deeper into this area, somewhere in this 61.8 Fibonacci retracement. Roughly, the gap fill is a little bit lower, around the 350s. So as this comes down, I am going to be looking to sell some out of the money puts for some type of a consolidation or just some price memory down here. You can see for some type of a bounce. There's a lot of volume around the 340s, so that probably somewhere around there. If we do continue down, this area would probably be a good area to sell those strike puts. You can see this was also a breakout, this 349 to 358 area. So I'd be looking to sell strikes in there on a move down. So we covered that. Let's get into what everybody has been waiting to really hear, Apple. So the issue here for me with Apple is it's showing very similar price behavior in the sort of box area as it has in the past. So you can see it took earnings really to get it out of the box in both instances. Here, took Apple out of the box. Here, took Apple out of the box. So what is going to happen Monday? Are we going to get earnings that will take Apple out of the box and take it higher? It's possible. That's what it's looking like. I've been hearing a lot of consensus discussion about that, and the issue for me, the caveat I have, I'll give you sort of the reason why I think it could be this time, quote unquote, could be different, is that we did get the 1.618 Fibonacci extension, this 128.97, and maybe this time is the breakdown. Maybe we do wind up coming back down and testing these sort of channel lows. I sort of have drawn them in here a little bit on if this one is more official, this one's sort of like a more tentative one, and that support comes in down around these 117s and 115s. The gap fill is down at 109, which is roughly the 61.8 Fibonacci retracement from the low here to the high here. And my thinking is that if there is some type of a disappointment, maybe we do have some type of a move down. Now, the reason I think that this might not happen, as extensive of a move, is that if you look in the open interest for the puts for next week, the 125 strike is ginormous. It's 100,000. It's by far and away the largest open interest. So I think that magnet here, it's also sort of we're a volume distribution. It's one of these big type of round numbers. I do think that that area could have some support. The expected move in Apple is $6.21. On the snap, sort of on the earnings, and then into the expiration of $7. So roughly down in this area. So I do think that area could be some type of a support. Apple tends to fill gaps. So maybe if it's bad, it sort of meanders and goes a little bit lower and then pops up. I also don't love that we didn't check back to the old breakout, this 119.75. You can see we kind of got close here and we launched, and I think that's been part of the reason the rally hasn't been as strong. Now, my thinking to the upside is that we are similar in pattern to the times before. Traders do what it works till it doesn't, and these both resolved higher. So you've got to kind of think higher here. even with this retracement, like, think about it. If you're long the stock, like if you're Carl Icahn and you're in size like that, I think the guy has like 50 million shares. He can't just sell into this. He needs a big market. He needs that big blow-off price extension like he kind of got in that day in Netflix. Remember when they reported and the stock just like zoomed up? We don't really have that right now. We would need some type of a spike up higher. Now you can see I've drawn an unofficial trouble line where highs have resisted in Apple, and we are way away from that. So my thinking is if we do wind up resolving and break out of the box again, we could come back up into like this area here in the 140s, maybe even the high 140s if it has some type of a summer rally up and resolves out. I mean, this has really been going on for a while. I would think that any type of a move up here would start really breaking the stock out. It's had a lot of consolidation in terms of time and price in a fairly narrow range. So if you want to wait, you can wait till you see Apple clear 133.60. I think above there, it breaks it out of the box and gives it the legs higher, like it did here. You can see we finally got above and it went. Same thing here, finally got above these highs and went. So if you want to sort of play wait and see and be the quote-unquote more sure money, you want to see this 133.60 clear. However, I have been talking about this level of this 129.85, and that was the pre-market high Apple made on the day that it was added to the Dow Jones Industrial Average. And you can see we broke above there and closed above there on Friday. That area has been absolute torture and grim death. Anytime we've gotten even close, it's backed off and sold off. However, the price action in Apple here changed a couple of days ago. We had a false breakdown here below the 50-day moving average. Let me zoom in a little bit to show you guys the price. Auto. Let's see if we can zoom in a little bit. Yeah, that's great. You can see it was riding and holding the 50 and this 20-day MA confluence. We had a false breakdown, and then responsive buyers came in and just took it right back up. And this really was a change in price pattern for me to see, the break not finding new sellers to take it down to fill up the triangle, but did take it up. So I am constructively bullish on Apple. If you want to play it sort of the Chicken Little way, sell some puts while they're still juiced. They're currently like 50% IV. Normal for Apple is like 25, 26, so it's over double. It's not really crazy, duper expensive just being double. If you sometimes look at stocks, they have like normal 30% IVs and they're like trading 130 or something into their number. But for Apple, this is fairly jacked. So I think put sales below 125, near dated, like expiring this week, probably work. Or you could do something like maybe if you want to do some type of a diagonal or calendar, maybe sell those puts to buy some type of an upside call spread like a 130, 135 or 135, 140 or something along those lines in a later series, like maybe in the monthly. Sell the expensive put premium for now to buy the cheaper premium later out. Or you could always do shares. You could buy a put ratio or put spread to hedge it. That also works, but as I said, the pattern here looks bullish for Apple to continue higher. My only real qualm with that, again, to summarize, is that we didn't tag back here, and that a lot of the people who are kind of Apple haters now seem to be a little bit on the Apple lovers. So this could be, believe it or not, maybe a pop. Always keep in guard. This could be like a pop and flop. Maybe like these people get rewarded, but everyone's already in, and it doesn't have resolution higher. Keep that also in mind with Nasdaq, where you did break out. This hasn't broken out yet. Maybe this will continue with it. If not, it could also make it a reversal and bring it lower. So Apple is going to be really key on Monday. That and the Apple Monday, Fed Wednesday, those are going to be the keys. Amazon, I've been talking about that stock being bullish. I thought that it would retest the old highs up here. It blew through there. It got even higher. However, I have drawn a channel in Amazon, and we are getting close to the top of that channel. So if Amazon does continue rallying, you probably want to look to take some profits up into here. It's possible it does something like really blow through, and or what it could do is just grind its way higher to this 1.168 Fibonacci extension up close to 484.73. We are currently at the 1.272, about 441. So I would be looking, as we rise here, and it is possible that we do, to look to lighten up. If we wind up coming back down, the reference all-time highs is roughly around 408. We broke out above 389. If we do wind up coming back down, maybe look to sell some out-of-the-money puts in strikes that, are going to be safe. Down, somewhere between 348 and this 389.37. I think that area will have a lot of price memory. So if if Amazon does something like pulls back, partially, I don't know if it's going to fully fill the gap, but if it gets halfway down here, maybe look to sell some puts as a long proxy. It might be a little bit easier than chasing with stock with the trade location up here. BABA finally starting to turn. It's this 80 base, 80 to 82 has been a lot of support. It's starting to perk up. Maybe it does do something like finally come up to the channel high, roughly around 90. I've been looking for that move for a while. However, this stock has just been absolutely fits and starts. I mean, look at this reversal. This came right back down, came up, came down. Just a choppy mess. This thing is, I had played this. I wound up being... I had played this long with a put like hedged with puts, and I wound up being taken out last week. Currently, I have no position, although I would be looking to, if I had my druthers with this stock, what I would love to see, and I don't know that this is going to happen, but I would love to see this 80 get taken out on some type of a move, flush all these we can chaser, buy the dip people out, and have it like a bit of a look below and fail and then reverse back up higher. So you could just see if there are really interested sellers below there. If we could dip below there and then rally back up, I would have a lot of confidence that there are buyers in the stock and that these lows are good. Until then, I think that there's just a lot of worry about share overhang. There's been a lot of inside sellers. I think there's like 1 billion shares or something crazy coming due in September. So there are kind of easier fish to fry, so to speak. But I do think that if we could get out of this area here, this consolidation, maybe it's on their earnings, there could be a run back up, even maybe to 100, believe it or not, to fill this gap. I do think that that's going to eventually happen. I think that these insiders really need to get the price higher for that expiration, for that unlock. So to me, I think it would behoove them to get the price higher. I do see that coming. I don't know how or when it's going to happen. It's going to probably happen in a day where everyone's not going to be involved, and then they're going to have to chase. But I do expect BABA to eventually go higher. I just don't know what path it's going to take, if we're going to have to see that kind of shake and bake look below first, or if we're going to be able to power up out of this range, this consolidation, and get up there. And we do have earnings coming up, so we'll see how that goes. Another one of these Chinese stocks is BIDU. And that I had been talking about this stock the last time it had come down. That 391 was the after hours low, and I sort of was looking for that to buy the dip. But BIDU is sort of riding this channel. Any price action on the other side of it has been met with buyers rather quickly, although it's been really, really choppy and sort of trying to build a base. But you can see we've been breaking this downtrend or down channel within the up channel. And earnings are coming up here. You have an expected move in BIDU. I believe it's like $11.31 on the snap and $12.68 into the close. They report Wednesday. Maybe this does finally start getting some mojo back higher. I mean, it's done a lot of time in the wilderness here. It's had ample opportunities to break down and hasn't. If it does wind up breaking down, I do think that 191 area would roughly, it's also a gap fill, and it's the after hours low from this earnings, which never made it RTH, just means regular trading hours. I think that area would be a good right or right out for some type of a bounce and maybe like a failed check back to the old up channel. But for me, this is looking maybe a little bit more bullish, like the stock wants to come up. I'm going to have to figure out how I'm going to play it. I'll discuss it a little bit on the stream during the week. Chipotle. Take a look at this sucker. This is also getting really close to a channel low. And I've been discussing maybe playing this for some type of a right or right out trade action. We're getting to the lower end of this distribution. We have a reference area down here around the 613s. And we also have these reference lows. So I'm actually looking for Chipotle to maybe come just a little bit lower, and then I'll probably do something like just sell some out of the money puts, or maybe just buy the stock here for some type of a right action. I don't know if I'll play for the full gap fill, but I would definitely play for a move up to the gap down day high, which is the 656 area. It's also roughly into like this breakdown area. So I think that there could be some type of a reversal if the market's strong and come back up into this area. It's also sort of like the meat of where this bigger distribution begins. So I would be looking for that type of a move. Probably the easier play, like I said, is to sell some really far out of the money puts that are maybe more near dated and just play for a bounce that way. Facebook. This stock has been really choppy. It's traded in these crazy spike moves, consolidation, spike moves, spike kind of like massive sell-off down. And here we just got, they had reported they had missed revenues. They had beat on their earnings, but missed revenues because of some type of a currency issue. And you could see the stock actually did go higher, it reversed lower, and we're coming lower again. So I see this as having a lot of levels in here that are really reference areas. And for me, the one that is really important, you can see here, the 50-day was sort of where we gapped and went here, held again. Here we bounced a little bit ahead of it, but traders like to do what works again until it doesn't. You can see the 50-day moving average roughly is 80.88. In the after hours low here, which we never made to in the regular trading hours, was 81. That area to me will be a good area for some type of a right out trade with shares. You can see that there are some other reference areas in here, this 80.34 and this 79.71. This had also been one of the major highs in the stock before this and before this. Anything above 82.17 to me gets a little bit more bullish, like if we could bend back up here. But I do think if there's some type of like gap down on Monday, and like let's say it's like right to here, that to me would set up as a really great right out type of a play. And we've also come a long way. I mean, the highs up here were like 85, 86, and this would be like $5 or $6 of straight selling. So that might have exhausted some of it. You can see on Friday you could see Thursday the volume was higher. Friday we did come lower, but the volume is starting to taper off a little bit. I longer term think that this stock goes to 100 or higher. I'm not backing away from that call, although I will tell you if there's some type of a larger market correction, this area might not hold. The real risk I see, and I've said this on the stream, is to 78s. I see 78s as sort of like the new 73 to 75 area, which was the key area here. So like 77, 78-ish, that area to me, this area, I see that as being the much stronger support for the stock. If that gives, then we'll revisit it, but I really see this area as, in the current time frame, this is the kind of the buy the dip sort of right out area. If there's some type of a larger market correction down here, could be the spot. The easier way, and I've said this a few times on Facebook, is to play it with short puts. Maybe these lower strikes are the ones you'd want to use. I played this for earnings with short puts, and I also had stock covered with covered calls. That stock was taken now for me on Friday. it was sort of like the remnant of a play. I had originally played that with a call fly where I was long stock, I was short calls, and then long calls above it. And I had sold those out when we got up here. It came back down, and then I rolled the short over here. I did this. I rolled the short calls I had out to the earnings date, and when it came back up, I wound up being able to get out of the stock now with kind of like a right twice. So this wound up being a really big win. I've had a lot of success with Facebook, with trading the levels in the past, so I will keep doing what works until it doesn't. So I'd be looking to kind of load up a little bit back here for right or right out. If not, I'll be looking to sell these puts. So that's Facebook. Twitter. So there's some speculation that Facebook might be buying Meerkat. I don't know if that's true. It was something I was discussing on Saturday night. and with some people on the stream. I don't know if that's necessarily substantiated or not. To me, it wouldn't really make sense because Meerkat works with Twitter. I don't know why Facebook would be involved. But you can see that I've been saying for a while that this stock needs to see 2 back-to-back good quarters for the street to kind of believe in it, to get adoption, so to speak. And we had one here. We've just been in the wilderness chopping, and now we have another one here. If this does wind up going higher, I see room in the channel up to about $60, maybe a little bit higher. There were some reference highs here around 56, but I don't know if that would hold it. I do think we would get up to 60. If it's disappointing and they, give some terrible report, I think we're going to fill up the triangle to somewhere close to 45. You can see it's about the half back from this entire move. I think we would come into somewhere between there and 42. So between 44.78 and 42.72, I think that area would be the quote-unquote buy the dip or sell the puts if we do have some type of a spike move down into there. The channel low, though, roughly comes in around 38s and takes you back into this chop zone. But I don't necessarily know if we get there. I mean, I'm sort of constructive and a little bit bullish on Twitter. I think that they're doing better monetizing their service. I think they're doing better a little bit with user engagement, particularly with this new Periscope real-time streaming they have. I think that there is a good story there. I think Twitter is really good for the news. I believe in it longer term. I think that the easier way to play it would be on some type of a move lower to sell puts into, but if you're long, I would say just hedge it. The options premium has come in quite a bit. If you want to be long stock, this is maybe how I'll do it. I may be play it long with the stock and long like puts or some type of a put spread for the earnings. The one thing that concerns me though is that a lot of the the TV talking heads are bullish on Twitter. I sort of like when they disbelieve and they don't like things. But I happen to believe Twitter a little bit longer term probably will do well. FEYE. This one has been really kind of choppy. It broke out of what I saw as an inverse head and shoulders. You can see this, and I drew the neckline in here. So anything above 43.28 I think is sort of bullish. Friday it kind of had a little bit of a look above and fail, but market really wasn't doing that much. They do have their earnings coming up soon. I think that I believe in the story. I didn't really like this management. I didn't like that they had done some unlocks and sold shares, up at the highs, but we've come a long way down since then, and we've done, it's sort of paid its penance. So I do think that there's potentially, possibly, if the market stays strong, a move up to the upper part of this channel, like around $50. The IPO high of day here, this like 44.89, I think has sort of gotten in the way here a little bit, and now we're coming to it again. Maybe there's still some responsive sellers. But it seems like these stocks want to go higher. I mean, everything I see in the news is like cyber, people hacking, breaking in, cyber It seems like there is a lot of demand for these types of stocks. The downside risk to me, I see would be the gap fill, 42, 43-ish. That's roughly around the 50-day moving average in this sort of uptrend within the up channel. So I would be looking, if it does wind up coming back down here, is right or right out. I'm currently long this, being short some puts. If it came down, I wouldn't be so thrilled, but I would be looking to kind of like re-up the position. I'm going to be trimming probably on Monday on some worn down puts, particularly if there's some strength. So I would be looking to reload on some type of a move down. At FEYE, the earnings are coming up. They're on Tuesday. I believe the expected move is like $5 or so. So. No, I'm sorry. That's my mistake. The earnings are coming up. It's like a $3.71, about $4, a little bit under $4 move. So that would roughly take this down to about 40, which would sort of fill this gap in here, and it also would roughly coincide with this channel low. So that to me would be the kind of the real risk range. The move up, like I said, would be like to 48. Maybe there's some type of a blow through up to $50. That's how I see it. CyberArk also looking kind of bullish. It's coming back up into its reference highs. It's doing it in a bit of a grinding fashion. There'll probably be some responsive sellers up here just because it was the old high. And then the key is to look for this to kind of pull back and maybe hold the trend line on some type of a pullback here. Like if it gets up here and kind of lists back, maybe it fills the gap and hits the trend. That would be a good right or right out type of a play. I believe in these stocks longer term. They are better to buy on dips, though, in my opinion, than to chase on rallies, sort of like everything is in this market, because it's a responsive market, not initiative. Gilead. This has done kind of some crazy stuff, right? This stock has been acting kind of cray-cray. It had been in a downtrend. I sort of drew in an unofficial channel. It did stop here right around these reference lows. I had talked about playing this short on a break of like this 98s down to 95s. We got it. And now it's came back up. It powered up over the downtrend, had a bit of a check back, and now rallied again into the sort of reference area, these 105s, and has been backing off. I think that anyone who wanted to sell this stock really should have, I would think, have done it already. It's been in this long consolidation for a while. Maybe on earnings it does get a gap fill back up to these 108s, and maybe if the earnings are real good, they could get back up to the highs around the 116. They have a lot of pressure here. I know there's a lot of competitors in the market. Gilead doesn't trade really at like a crazy lofty PE, but there is a lot of concern, and the stock does tend to move. I prefer buying it on dips rather than chasing. For me, again, the ideal actually would be is if this thing did something like came down on earnings back into this pocket and gave me the opportunity to sell some out of the money puts. I would be looking very interested in that on Gilead. If you're currently long, the real key area here, these 103s, short term are key. We're kind of right on them. If it loses it, then you're sort of back in this like big chop range of this 98.37 to 103.97, with 100 really being kind of like the proxy for health. You can see that it was holding with look belows. Here is really when it gapped below. So this like 98, 100 is really key. I think I'm currently long a put ratio in this. I'd have to check. But I had been playing it both short and long to the long side. So I am still looking for it to potentially go a bit higher, but I wouldn't do it naked. I would be doing it hedged, particularly in this tape. Google. I saw a lot of people on the stream talking about how bullish they thought Google was. And I think that this stock is going to be, it's a hard pattern to kind of really crash out of, but it's also really a bit of a harder pattern to get higher out of, because you have these reference highs up here. I've been saying this like 577 to 580 is resistance. It was once again, and you also have a down channel it's coming into it that has been in place for a while. So this area also roughly up here where there was all this chop, I do think that there could be some more responsive sellers into here. And even if you do break this, then you look what you still are coming up to is sellers up here around the 600s. So yeah, that's a decent, in Google, that's really not like so much. It's almost it's a 580, what are we closed at 573, $25 in Google or so, $30 in Google isn't like, all that. Hey, it's still $25-$30, and we would love to catch it if it comes up. But I would really be looking for this to come back down, and I'd rather buy it on a dip than chase. If you do want to play that, look for this channel to clear and sort of like these highs to clear. I think the easier way to play Google might be with like some type of strangle where you sell out of the money calls and then also out of the money puts. It doesn't have gap risk anymore because of earnings, and I think that is probably the safer and better play to do with Google. IBM came up to where we had discussed. I had said that I thought that this looked like it could come up here for after the earnings. The 170s, the top of the gap, I said would be the first place to sort of sell. Now we've come up and we're not really backing off a lot. So maybe this does wind up filling, particularly if the market is strong. And think about what this would do to the Dow. It's a huge component. I think it's actually the biggest component. It would bring the stock back up to this 182 area to fill the gap. So I do think that that's possible, but take a look at this 200-day MA. It's been some resistance, and I do think you need to clear this earnings gap, sort of the full high of day, this 170, 192 for that to be in play. I do think that the easier play would be to sell out of the money puts, probably now 165s or below, since that had been the floor, or I should say the ceiling of the resistance. It should now be the support. So I would think that if this has some type of a back off here initially, this would be kind of a safe play area to buy the dip, and then if it came back up, maybe this wouldn't resist as much because you had gotten some of those sellers out here, and then you get the move. So that to me would probably be the safer way to play IBM, considering a lot of people have been underwater for this in a long time, and there's probably a lot of people interested in getting their money back. So I think, again, buy the dip, or if you really are motivated, play it into the channel. Into the gap. LinkedIn, they're reporting this week. Pattern, look here. I mean, it's very similar. Consolidation here. This wound up gapping and resolving higher. Again, this sort of listing gap. Now we listed again. I would think that you can see I drew a channel. The way I would play this, if you want to play it long, I would sell some out of the money puts roughly around where this gap fill and this breakout were. So like 232 to 238 strikes down here. Or you can play it with a put ratio if you're bearish, where you buy these and like sell these as your terminus, or like these, like 245s and these as your terminus. But I mean, the pattern to me looks like it does want to go higher, and there is room to the channel high up here, which is like close to $300. It's like in the 290s here. So the pattern here to me is a little bit bullish. If you're bullish on LinkedIn, you've used up a lot of your time for people to sell. And the stock is looking similarly to this pattern here, where it might want to like kind of gap and go up. So I would be thinking bullish. If you want to play it the Chicken Little way, sell the out of the money puts down near the channel low, sort of like near this gap fill and breakout area. I think that this area, and if you even could get lower, depending on your time frame, maybe even like these 225 area. That area, I think, would be a lot of price memory, so to speak. It's also a volume distribution. So if this came down, I would be, first of all, I'll probably be looking to play this maybe small ahead. Maybe I would sell these. But I really like to play these stocks sort of after earnings. The second mouse gets the cheese theory, so to speak. So if this was like to gap down here, I'd be looking to buy this with shares maybe in size for some type of a bounce for a gap fill. So that's my thinking on LinkedIn. The pattern looks a little bullish, but I would play it a little bit of a Chicken Little way, more likely ahead of the print, and then play it like sort of put my big boy pants on, so to speak, after the print. Netflix gapped up. I had been bullish on this. I discussed how I had played it. It's now just kind of in a consolidation chop. These big outsized moves don't tend to come back down so quickly. It is trading on the other side of the channel. It's bouncing on the outside of the channel. You have to see if it now accepts outside and goes still higher, or if it does wind up coming back down in. If this did wind up coming back down closer to these lows, I'd probably be looking to sell some out of the money puts roughly around where the gap fill is for some type of a theta decay play. So that's my thinking on Netflix. It's a little bit hard for me to countenance chasing it here because it has had such a move. I mean, look at this thing. It was like 409, and now we're kissing almost $600, 576s. That's a pretty big move in gap fashion. I think that this needs some time to digest and probably is going to go sideways for quite some time. I left it out last week, and there was like a bit of a firestorm. I thought I was going to be lynched this week because I left out Priceline, and it was just because I ran out of time. But Priceline, you could see on their last earnings, came up roughly to the channel high, has backed off, mostly filled the gap, and now coming back up again. They do have earnings coming up here on 5-7. So I'd be looking to see if this can break the down channel. If you can break the down channel, you're doing something you haven't done in Priceline for a long time. You would be making a higher high, because presumably you're breaking the down channel, and these highs to me I don't think would resist because they're roughly equal. You'd be making a higher high off of a higher low, and I think that the stock would have some legs. Expedia reports this week. So they report on Thursday. The expected move in there is actually fairly large. It's like 744 to 790. So if you are long Priceline, do be aware. You have earnings here 5-7, but I think Priceline could get some giddy up, either up or down, big time on Thursday. So I would be looking for that. If it is up on Thursday, you're probably going to be wanting to maybe book some profits because the move will probably be ginormous. They tend to like to move Priceline in like earnings-style moves on Expedia's numbers. If that does happen and you get like a $50 or dollar move or something, don't be a pig. Book some of it. It will be pulling forward some of the gains you would have made here. My biggest concern with Priceline is again the currency risk because they do a lot of business overseas, but I do think that this pattern is looking like it does want to kind of maybe break out of the channel. So I usually don't like to anticipate. I like to do it when it happens. So I would be looking to kind of buy the stock over these highs. The only issue I have is that it depends on how it gets there. I do like that this has done some consolidation and it's been kind of grinding up. It's not been in this, this multi-day up fashion where there's a gap, there's a little bit of follow through, and then it falls apart. So I do think that there is room, actually maybe considerable room in Priceline back up to the 1330 if it does wind up breaking over this 1264 area high. So that's what I'm looking for. If there is some type of shake and bake and it goes down big on Expedia, like back down into this area, and it flushes out some of the people who have been, kind of holding on for hope, and we get into some reference areas, then I think it's starting to look a little bit more bullish to play it long ahead of the print because it'll have taken out a lot of the weak hands, so to speak. So that's sort of how I'm seeing Priceline and how I will be trading it. Let's end on Tesla. Tesla broke the down channel here. It has done some time consolidating. It is now gone up higher and come into a little bit of some reference resistance here in the 220s. You can see this area had been some resistance. I do think that there is some room up in this between 225 and 228. I think it might struggle a little bit because of the 200-day moving average and just because it's reference areas and it has come up so much ahead of the number. So I am playing this. I'm now playing it with short puts, and I would be looking to add if there's weakness ahead of the print. They sort of pre-announced. They had come out, and one of the reasons for this move was that they announced that their numbers were good. There's been some firms that have downgraded this since then, and they've said that the guidance hasn't been so, or they're anticipating the guidance not to be so great. I sort of think Elon Musk may have learned his lesson in reporting, with the treatment the stock got the last time. So I'm sort of fingers crossed that that'll be the case. I'm not sure how I will be positioned when Tesla does wind up reporting. They're reporting, I think, on 5-6, and it's like almost a $20 expected move, which isn't really that big for a stock like Tesla. You're talking about just coming back down into support here around 200 or powering up, up to like the 240s up here, where there's also some reference areas, this 240, this 245. But you can see this area had been some strong support. It broke. It's been resistance before. So it's just, these is just some responsive sellers here who are, probably some cutie pies trying to initiate shorts, and also people who had been buried here for a while and they're just looking to get their money back. Eventually, I do think Tesla could get back up and fill the gap to this 250-670 area, but that will require really good earnings and probably some type of something new out of them. So let's kind of wait and see. I do like it as long as it's outside of this channel. If we lose this like big emotion bar low, this 211.69, then I think the stock is going to be in for a little bit more trouble. But we did hold this 203 to 206 area that I had said was really key. We powered up. We're now into that next levels. So I'm still looking to buy the dip in Tesla. Anyhow, thanks so much for watching. Be sure to follow me on Twitter. My handle is @JustinPulitzer. Be sure to hit the like button on this video if you liked it. And please leave some comments, ask some questions, and check out my Wall Street Journal article. And the link will be posted in the description below. So let's have a good week, and cheers.